learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I hope you're having a wonderful day. This came out earlier. Apparently, Elon Musk is interested in Facebook. No, he's not. Oh, that was a WhatsApp, Elon? Oh, okay. He was not interested. No, that was fake. Apparently, this was Facebook allowing people to make fake accounts and... That's not me on Instagram. That's what I'm trying to tell. It's not me who followed you. But in other news, tech stocks are still good for inflation, right? They're not anymore? Okay, no, the tech stocks are not. Okay, actually, the last 4 days, NASDAQ's down. Okay, all right, let's just start this one over. Okay, hold on. Nah, I'm just playing with you, Chad. I got the watch list for you. We are going to go over what happened with the Fed minutes. It is very important, and there's 3 main things, and then I want to focus on the plays. So... excuse me, let's get into it. I need to tell you about the outfit now because some people might get mad. It says make volatility great, okay? That's the disclaimer. I wear this shirt out in public, bro. I get mad weird looks from years ago till today. So this one never made the cut. So before we released the make volatility great, this one was the trial one. Look, oh, what's up, son? I'm sorry, I'm just excited today. But Chad, God bless you. Shout out all my respectful, positive people, and hopefully we see you on stream. But what happened here with the minutes? They came out, and if you saw the market, it was wild. And the craziest part is that we gapped down 2% today. So that was one thing to note. The big thing here in the morning, it was a global bond rout. Australia, New Zealand, and a bunch of other countries, even Latin America. There's a lot of stuff going on with Colombia, inflation, and all of that. All of that was going crazy, but then we gapped down, and all of this was in anticipation of the minutes. Now, that whole little inflation joke, this is what was funny about it, because today, this morning, people were getting worried now as the minutes were ready to come on. People were talking about the tightening. They're saying, okay, well, if the Fed starts tightening, then maybe the tech stocks might get clapped again. And you saw these worries reemerge into the market. I know a lot of you have been asking about that. So that's what was interesting about it. We gapped down. We chilled out. We sold off pretty good. The NASDAQ was down 2%, 2 and some change by the time we hit the lows within an hour. And then we chilled out. And then the minutes whipsawed everything. So my initial representation of it when we were watching, and if you were watching too, I thought it was initially dovish, but right now it is very confusing in the sense that everybody is still split. People don't know if the Fed is faking it, if they're walking the walk. People are saying, even this morning, this is what they were worried about, that if the Fed starts tightening and they go through with this plan, they are going to tighten until something breaks. So literally, you keep hearing about recession, the Fed knows it too, and everyone's saying that the Fed wants to purposefully start a recession to slow things down. I think it was Patrick Harker this morning of the Fed. He talked about a negative wealth effect being a policy tool. So pretty wild to think about there, but all of this was happening, and now here are the 3, that's 6, but 3 main events or the main things that we got from the minutes. Number 1 here, the FOMC participants, they proposed shrinking the balance sheet at a maximum pace of 60 billion for treasuries, 35 billion for mortgage securities. It comes to 95 billion a month. Apparently, some people had expectations around 60 to 90. A lot of people have been getting confused because this is combining the both of them, but this did come in line. But you'll see here, compared to the last time the Fed ever did any balance sheet reduction, or the most recent time, 2017, 2019, this is double the size and double the pace. And 2017 and 2019 was probably bigger than any other time we saw. So that was the first thing, balance sheet reduction. We are going to start hearing about this. And for anything with the Fed right now, what you got to understand is that we're hearing about it today. Wait for the notes from the banks tomorrow. People are going to be talking about it, but leading up into the Fed meeting for the next month, I mean, people are going to go back and forth, and we may still get a divergence there with bonds. And don't forget, you got a commodity report here on Friday, but next week you're kicking off bank earnings, and then tech and chips are after that. And before you know it, couple weeks of earnings, and then you get another Fed meeting and CPI CPI is next week too. So keep that one in mind. But that's the first thing here with the Fed, balance sheet reduction. The second thing, and this is where it gets confusing, and a lot of people brought this up on the chat, and this is the thing you got to realize about the minutes. The minutes is how they came to the decision about a month ago. A month ago, stock market was at 415 on the S&P. It was actually pretty low. So think about the mindset they were in, and this is where people are getting confused because they're like, wait, is the Fed really going to hike 9 times like the market and their dot plot is showing? How are they going to do that if they haven't moved yet and if they're not all on board to kind of go at a quick pace? And this is now where it was confusing. In my opinion, I think we don't have any like unanimity. No, it's not unanimous. They're not all on the same page, and that's what the second thing here from the minute shows, is that many officials would have preferred rates to raise by a 0.5 percentage points. They said many, not all. That means some people opposed to it, but it wasn't as like, okay, everybody's on board. And then think about it. What we got from Laylold and her signaling yesterday, a lot of people were expecting everybody was on the same page, especially since she is a hawk or a dove more or less that has now turned hawk, but maybe a month ago she stood in a different camp. But that was the big thing. They said they were going to raise the rates 0.5 point if it wasn't for the Russia-Ukraine situation. And then finally, they said inflation has crept higher. Fed officials have pivoted from a gradual approach to monetary policy, and that they want to move this stance of monetary policy towards neutral posture expeditiously, aka they want to do it fast. And they even did mention how public credibility is at risk, and that's why they want to follow through with this, but we will see what happens. But those are the 3 main things, and yes, they are all very important. There's a lot of implications now, but realistically, the bonds didn't move. TLT did not move. The dollar moved. Bank stocks moved. A lot of things moved, but TLT actually kicked it, and a lot of people are saying, really, until we see them do a double hike at May, no one's really going to believe anything. So we will see what happens. But that was all of it. That's the main thing for today. Again, there was a couple of news events related to now oil, and this is why I'm going to bring up the EWG and then the EU and all of that. But pretty much the EU, they said they're going to stop the imports of coal, but they said by the end of the year, and there was one piece of news that said they're not following through with it now. The United States came in, and we actually, through the IEA or the EIA, we announced more barrels released beyond the 120 we just announced a couple days ago, and a lot of people kind of let it chill out there. And again, China is even locking down more. These are the real main things that are going on right now. But realistically speaking, it is the energy situation in Europe that is the biggest threat. Of any of the speeches that we got today, it seems like the plan in moving forward and cutting off Russia just yet and us increasing more of these plans, it seems like this is really going to be a speed bump. So I'm watching now. Are they going to kick the can down the road with banning Russian oil, or will we see escalation? That will move a lot. Now, let us get into the plays, baby. What I want to show you here is EXC and EWG, but I want to show you something cool about it. We brought this up on this watch list, and then I brought it up on this watch list too. We were talking about the lagging options and the stock price going up and the option price lagging behind it, and we have seen that a lot with volatility. So now, why this is important, if you haven't seen the EXC play, those are up like 400% since the average down. I'm up now 200% total. We even had the ones in the money, but this was a killer play, but it lagged. It lagged so hard. It was like unreal, but I've been noticing now some of these lagger plays, they are good, but they are still risky. So now let's go to EWG, and this is what I want to show you. If you notice, the EWG gap down 2% today. Our put plays, they pretty much stayed the same price because they ended up running there at close. And then a lot of the other puts, some went and some didn't, but pay attention to which ones went, and this is what I want you to look at, because now the EWGs are not lagging yet. It's kind of lagging, and now this is what I'm going to say to watch for. I think this could create a pretty wicked play from here on out. Yes, I already have a lot. I'm holding it, but now I want to pretty much try to play EWG like the EXC, and like I'm saying, none of this is a recommendation. I want you guys to learn from it. A lot of plays, if you haven't noticed, yes, we've had some good plays, but a lot of times they're going down before before they're going up, you can use these as place markers and learn. And guess what? At one point, I think they've all gone green. You got to decide when to take profit. So if you don't have cash for the next move, you got to look at your account and say, okay, I'll take some of these gains, cycle through them, and do your thing, baby, okay? So what I'm trying to tell you is watch these plays, use them as a place marker. But now this is what I want you to see. It's a lot easier if I just show you here with this screen, but I'm going to start with the EXC, and what you can see, we got it around here, but this is the gap that I'm talking about. And look at, stock was hitting a new high, and a lot of these options near the money, they were actually down almost 50% from when we made the first play. So you can see this little gap, and then what ended up happening, it kept going up and they caught up. Well, this is the same thing that's going to happen with the EWG, but the thing is, the premiums are not really lagging just yet, and that's why I think the volatility is going to be very important. But take a look here as we get to the EWG. I'm going to start here with the 26s. Again, this is overlaid, and now it's a put. It's not a call, so you got to understand the difference here. But what's happening is as the stock goes down, the puts go up. That makes sense. And what you're seeing here, stock goes lower, the puts start to hit a new high. Now keep going down the chain, and you'll notice the gap gets smaller and smaller. And would you look at that? Some of these were actually lagging yesterday. So we keep going through. You'll notice some are higher, some are lower. And then when we start getting to our options, you'll notice ours actually, they're doing pretty good right here. Actually, we're at the 19s. Those are the 18s. They were a little bit crazy there in the morning, but they're kind of staying. They're not really reacting or moving with this stock as much. If anything, these other puts were going for more money the day before, and now they're going down with this stock. So this is what I'm telling you. If you want to play it, I would watch out. I think it's like the 21s or 22s right here. It's the 22 that's matched up the most, and what you got to look for is wait for this one to start moving with this stock. And what I'm going to wait for is one of these lagging indicators. Essentially, we need EWG to go down, and now for some of those far out the money ones, what I'm expecting, if EWG starts going down, I think if the puts don't move immediately, it is going to create one of these EXC opportunities, and I really think we're going to be able to hit it. So that is the main play that I want to highlight, because I am going to be looking that one a lot with EWG. Again, I have a lot of money on it, and after seeing EXC and these volatility, I just like these opportunities. But take note, these could play out weeks at a time. Again, it doesn't have to, and none of these plays am I expecting an immediate move. And really, if you've been following along, you're seeing they're moving, but it's not happening immediate. But when it does happen, premiums do end up going crazy. So I want to hopefully take advantage of this. That's the first one. As far as any other plays that I made today, I did grab a UPS. We talked about travel again. Travel got killed. It's kind of the canary in the coal mine right now. So we're going to see what happens. But I grabbed a UPS June 140 put for 95 cents. Didn't really move up much today. It went up a little bit, then came down, but kept it small, $100. I wanted some exposure, but like I've been saying, they've kind of went up a lot. So we've talked about it a lot. We'll see what happens. But this one, monitor it. Again, there will be a bounce, and we will be able to get a good play on the transport. So keep that one in mind. That was the only play. And then Wells Fargo, $55 call. I grabbed the May ones. I only grabbed two, 38 cents a pop, $76 total. I sold my Goldman Sachs puts after the minutes came out because I was like, well, it's kind of bullish for banks. It wasn't as hawkish as I expected. Sold that out. We got almost 100% on the Goldman. We made that one last week. And then I bought these two calls, $76, keeping it small. And then besides any other plays we made, I sold out of those Lockheed Martins I bought earlier this week. They were up at like 70%. Thought I'd take the profits and get to hold the other one. And then UNG, we bought this one 2 days ago. They went up 100%. Remember, I put in like $800. I got my whole $800 back. I sold them out at 100%, and I still have 5 of them left for free. And then finally, Facebook, relating to that fake Facebook news. I saw it come out and I was like, well, I don't know about this, but even if it is, I said, well, we're going to have our earnings run up. Earnings is around 2 weeks from now, 2 to 3 weeks for the tech stocks. So I grabbed a July $300 call, grabbed 2 of them at like $1.90 a pop, like $300 total. And I said, well, maybe we'll get a pre-earnings call play on big tech just in case, and we'll see what happens. But those were the only other plays. That was it for the day. I'm still rocking those EXCs. I really, really like that. Gonna be monitoring during the same plays. And really, I'm waiting for an entry on some of the commodities here or to see what we're going to do with oil. And I will have a good video tomorrow or the weekend. We got some interesting developments we're going to talk about. But Chad, that is it again. God bless all of you, my positive people. Thank you for watching. And make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, you got some good qualities, baby, and control what you could control. Even if you can't control even what they say about you. Epictetus, if they knew everything about you, they would have said a lot. What? That's good. Is that good? Better? I like it. But Chad, I love you. God bless you. See you in the morning, and goodbye. I'm still awkward as hell, man. Damn.